The bank just approved you for a $425,000 mortgage. Here's what they didn't say. That number is not what you can afford. It's the most they're willing to risk on you. Those are two very different numbers, and confusing them is the most common way people end up with a beautiful house and no life. This is the actual math, salary by salary. Meet Mia and Theo. Same job, same salary. $85,000 a year. Same bank, same week, same approval. $425,000. The bank ran exactly one calculation. Can these two make the payment without defaulting? Not whether they'll have anything left for retirement, for kids, for a single vacation. Default risk is the bank's ceiling. Your ceiling has to be lower because you're the one living inside the number. Mia buys at her approval, a $425,000 house. She puts $25,000 down, borrows $400,000 at 6.5% over 30 years. Principal and interest, $2,528 a month. Property taxes, about $390. Insurance, around $150. And because she put less than 20% down, private mortgage insurance, roughly $200 more. Total, about $3,270 a month. Her take-home pay on $85,000 is roughly $5,300 a month. The house takes 62% of it before a single repair. Add average maintenance, about 1% of the home's value per year, and Mia is left with about $1,700 a month for food, car, phone, savings, everything. That's not a homeowner. That's house poor. Theo, same approval in hand, buys a $280,000 house instead. Same $25,000 down, a $255,000 loan. Principal and interest, $1,612. Taxes, insurance, and a smaller PMI bring it to about $2,100 a month, right around 30% of his gross income. After housing and maintenance, Theo keeps almost $3,000 a month. He maxes his retirement match, builds an emergency fund, and still goes on vacation. Same salary, same bank, completely different life. The old guideline still holds up: keep housing, mortgage, taxes, insurance, HOA, at or under 28% of your gross monthly income. Keep all debt payments combined under 36%. Banks will happily approve you far past that, some up to half your gross income. The 28-36 rule isn't what you can get. It's what you can carry for 30 years without the house owning you. So here's what 28% actually buys, salary by salary, assuming today's roughly 6.5% rate, 10% down, average property taxes, and no other debt. $50,000 a year, about a $165,000 house. $75,000, about $255,000. $100,000, about $345,000. $150,000, about $525,000. $200,000, about $710,000. Notice the pattern. At today's rates, comfortable is roughly 3 to 3.5 times your gross salary. If homes in your market cost 6 times your salary, the answer isn't stretching the percentage. It's a bigger down payment, a second income counted carefully, a different neighborhood, or renting longer and investing the difference. 4 things shift that table for you personally. Other debt. The 36% cap includes everything. A $500 a month car payment removes roughly $75,000 to $80,000 of house. Your car loan is house money in disguise. The rate. Every 1% the rate moves. Your buying power moves about 10% in the opposite direction. The same payment that buys $345,000 at 6.5% buys roughly $310,000 at 7.5%. The down payment. Hit 20% and PMI disappears. That alone can be a couple $100 a month back in your pocket. Location. Property taxes range from 1/3% to over 2% depending on the state. The identical house can cost hundreds more per month purely because of where it sits. And if there's an HOA fee, count every dollar of it as housing. Closing costs run 2 to 5% of the price. On a $300,000 home, up to $15,000 due at signing. Maintenance runs 1 to 2% of the home's value every single year, forever. Then furniture, moving, the fence, the water heater, which leads to the one rule that saves people. Do not empty the account to close. If buying the house takes every dollar you have, you can't afford that house yet. You can only purchase it. Run your own line. 28% of your gross monthly income. Subtract taxes and insurance. What's left is your payment. And today, every $630 of monthly payment carries about $100,000 of loan. The bank's number tells you what they'll risk. Your number tells you what you'll live with. Every month for 30 years. New breakdown every week. Subscribe so you don't miss it.